I am teaching you this topic that is called Introduction to Accounts. Okay. Whenever we are doing any topic, the worksheet related to it would be on a QR code, and on the worksheet, you will find a QR code of the video. So if you do not understand anything, you have to go back to the video. Okay. Do you know about the syllabus? What is our 0452 syllabus? Do you know about our 0452 syllabus?
Accounting was?
Yeah, accounting syllabus. Okay. Look over here.
Yes.
The paper code is 0452. You're going to have two papers. That is, one is your paper 1 and one is your paper 2. Your paper 1 is a multiple choice question which is going to be of 35 marks, not 40 marks. This is going to be of 35 marks, and this is going to be 30% of your syllabus, and it's going to be for 1 hour 15 minutes. Okay. This is as
Okay.
per the new specimen,
Yeah.
and paper 2 is your structured and written paper, which is going to be 70% of your syllabus for 1 hour 45 minutes. Okay. This will have
Yeah.
100 marks, and it is going to have how many questions? It's going to have 5 questions. Okay. So,
Yeah.
two papers. Paper 1 is your MCQ paper, and paper 2 is your structured paper. Now, can you tell me what do you understand by bookkeeping? Or I will give you 2 minutes
Bookkeeping is like,
time. You can write what all you understand. What do you want to do?
okay.
Okay, I'm giving you 2 minutes time. Write down what all you understand by these terms. So when you come about bookkeeping, what do you think is bookkeeping?
Recording of financial statements.
You should only record. You're not recording financial statements. You are recording transactions. What is it?
Transactions.
So, whenever you're recording the transactions in a book, it is called bookkeeping. But when I talk about accounting, recording is bookkeeping. But when you talk about accounting, accounting means you are interpreting, you're trying to analyze the statements, you're trying to analyze the transactions, you're trying to summarize the data, you're trying to make the financial statements. So, that is all accounting. Okay. What did you write for
Yes.
profit?
The amount the businesses earns after deducting cost.
Okay. So after deducting the cost, that means from your revenue. Do you know what is revenue?
Amish, you're glitching out.
Do you know what is revenue?
The amount you get from sales.
Yeah, the amount that you get from sales. So from your revenue, when you minus your cost of sales, you minus your other expenses, whatever you get, it can either be a profit for the year or it can be a loss for the year. When do you know that you have a profit?
Um, when your total revenue, when your total cost is more, no, when your total revenue is more than total cost.
Revenue is more than the cost. Your answer is positive. That this is the time when you're making profits. If your answer is
Yes.
negative, that means your revenue is less than the cost. That is the time you're making losses. Can you give me another word for revenue?
Income.
No. Revenue is sales.
Sales.
Another word for revenue is what? Sales.
Sales.
Okay. So can you give me a distinction between bookkeeping and accounting? When I am
Um,
talking about bookkeeping, yeah, tell me, can you give?
Bookkeeping is like when you like record it daily, and accounting is like when you like summarize it.
Okay. So when you're recording the transactions, it is bookkeeping. When you're interpreting and summarizing the transactions to make decisions, it is what? It is
Um,
what?
Interpreting and summarizing.
Then it is what? Accounting. When you're
Accounting.
recording, it is bookkeeping. When you're interpreting, it is accounting.
Okay.
Bookkeeping is only going to focus on recording. Accounting will focus on analyzing. Okay?
Okay.
You need
Yeah.
to understand both bookkeeping and accounting so that you can analyze the business performance. So, can you just
Yeah.
give me 2 words? What is bookkeeping?
Bookkeeping is recording daily,
And accounting?
interpreting and summarizing.
Interpreting and summarizing. Okay,
Yeah.
fine. So, what is a transaction?
Transactions is like when the money goes out.
Anything that is dealing with money in the business is transaction.
Yeah.
So, what is transaction? So, when you're talking about transaction, when I am talking about transaction, what is a transaction? It is flow of money in the business. What is transaction?
Flow of money in the business.
Flow of money in the business. So, I'm giving you time. You are going to write the difference between bookkeeping and accounting and what is a transaction. This is the very basic of accounting that you must know. So now I'm trying to drill in the very basic concept of accounting in you. If you know the basics of this, accounting will become very easy for you. So let's take for an example, you are to start your own business. Okay? You are starting your own business. Can you tell me what are the things that you need when you're starting your own business?
Capital.
Okay. So that means you need something that has to come inside the business to start it, and you need this money.
Yes.
And you are saying this money is going to come from capital. Capital means whose money?
Owners.
The owner's money inside the business. When the owner is sending the money inside the business, it is named as capital. Yeah?
Yes. Yeah.
Can you tell me why is it called capital? Because of which concept?
Uh, Money measurement.
Business entity concept. What is
Business
the
entity.
business entity concept?
Okay.
What is the business entity concept?
The owner's identity is separate from the businesses.
Business. The owner's identity is separate from the business. Owner is separate, business is separate. That is why when the owner is bringing inside the money, we call it as capital. So, can I tell one thing that if I have
Yeah.
this as my business and this is my owner, and the owner is bringing in the money inside the business, can we say that this is sources of fund?
Yes, miss.
Why is it called sources of funds?
Because
Because
it's
it is
a
a
way to like
place,
fund the business.
yeah, it is a place from where the money is coming inside the business. And I can say that there are two types of sources of funds. The first source of fund is what? Own funds.
Own funds.
Own funds is what?
Loan funds.
Own funds is the
Yeah, the
owner's
owner's money.
own money into the business. And what is it also called? Owner's own money into the business is also called what?
Um,
Capital.
Capital.
What is it also called?
Mm,
Owner's equity. So owner's
Liability.
own money into the
Owners.
business. Owner's own money into the business is called own funds. Capital. Owner's equity. So the places from where the money is coming into the business, please refer this properly. Places from where the money is coming into the business is called what?
Source
Sources
of
of
funds.
funds. So what is sources of funds? Places from where the money.
Place from where the money is brought in.
So from what places the money can come into the business? It can be his own money, or it
Yes.
can be money from others.
Yeah.
Own money is called own funds. It is the capital invested by the owner. Or it can be loan funds. What is loan funds?
Liabilities and borrowing.
Liabilities and borrowing. So there is one rule over here that whenever any transaction results in the money coming inside the business, whenever any transaction results in the money coming inside the business, it is called the sources of funds. And there is a master rule over here. What is the master rule? The master rule is that the sources of fund always has which balance? The sources of funds
Credit.
always has a credit balance. So if you understand in any transaction whether it is a source or application of fund, so you can see if it is a source of fund, yes, it has a credit balance. So sources of funds always have what balance? Credit
Credit
balance.
balance.
You have two sources of funds. What are the two sources of funds?
Own funds, loan funds.
Own funds is also called what?
Capital.
And
Owner's equity.
okay, loan funds is also called what?
Liability and borrowings.
Okay, fine. Now I want you to write this before I take you to application. Now there's a short quiz to test your understanding. Which is an example of own funds?
Owner's capital.
Lovely. Which source of fund creates a liability for the business?
Loan from the bank.
Owner's capital is a source of fund.
Yeah.
Profit is a source of fund.
Yeah.
How do you know it's a source of fund?
Because when we get the profit, we can like reinvest in the business.
Okay, lovely. What is drawings?
Taking money out of the business.
Will it be a source of fund or an application of fund?
I think application of funds.
It will be an application of funds. Lovely. Fine. Let's go ahead. Say whether it's true or false. Own funds do not need to be repaid.
Um, True.
Loan funds increases owner's equity.
Loan funds. True.
False.
False.
Loan fund is a liability, okay?
Yeah.
Loan fund is a liability. Owner's equity can only get affected because of profits, losses, or drawings.
Okay.
Can you tell me what increases owner's equity?
Owner's equity. Own funds.
You remember capital, add profit, minus drawings would gives you capital at the end.
Yeah.
So profit will increase the owner's equity.
Okay.
Drawings means the owner is taking away money from the business.
Yeah.
So it is going to reduce the owner's equity.
Okay.
And what about losses?
Losses gonna decrease
What?
owner's equity.
It's going to decrease owner's equity. Lovely. Come on, match the following.
Own funds is money invested by the owner, and
Okay.
loan funds is money borrowed from external parties.
Okay, fine. True or false is done. This is done. Fill in the blanks.
Hmm. Dash funds refers to capital invested by the owner. Own funds.
Okay.
Dash funds include liabilities and borrowings. Loan funds.
Okay. Next one.
Source of funds show where the money um, comes
Okay. Comes where?
comes in the business.
Okay, fine. Identify and do the scenario question. I'll wait for you and then I will go and solve it because you will need time to do it, right? Come on. You have to identify whether it is own funds or loan funds.
Yes.
Tell.
First one is own funds.
Okay.
Second one is loan funds.
Okay.
Third one is loan funds.
Can you tell me how is this loan funds, trade payables? What are
Because
trade payables?
trade payables are like people who have like taken money from, who have to like still pay them.
But what are trade payables?
Like it's like our liabilities.
They're your suppliers.
Yeah,
Who are suppliers?
people who supply you raw material.
People from whom you buy goods on credit.
Yeah.
So when there is trade payables, what will you say?
People from whom you have purchased on credit.
You buy goods on.
Credit.
What are the two names for trade payables?
Uh, credit purchases.
Suppliers and creditors and trade payables.
Okay.
Retained profits.
Retained profits, own funds.
What is retained profits?
The amount like left after you paid dividends.
So retained profits is basically profits kept behind in the business.
Yes.
It belongs to the owners and that is why it is own funds.
Yeah.
Okay. Scenario 6. Who is 6?
Aisha starts a business and invests 50,000 of her own savings. Later,
What
she
is
takes
it?
a bank. This is own funds.
Okay. Then,
And then later, she takes a bank loan of 30,000 dirhams. This is loan funds.
okay, fine. So now you clearly know what are the two different types of sources of funds.
Yes.
What are they?
Own funds and loan funds.
What is own funds?
Owner's money.
What is loan funds?
Liabilities or borrowing.
Okay. Trade payables, what are they?
Amounts yet to be paid.
Okay. No. Trade payables are people from whom you buy the goods on credit.
Okay.
What are trade payables?
People who from whom you buy on credit.
Okay. Money is yet to be paid.
Paid.
What are the other names for trade payables?
Other names from trade payables are creditors and trade
And suppliers.
suppliers.
Okay, fine. So, can you tell me the places from where the money comes into the business is called what?
Own funds and loan funds.
Sources of funds. There are two sources of funds. Own
Yeah.
funds and loan funds. Own funds is also called what?
Capital.
Loan funds is also called what?
Liabilities.
Okay. So we are saying that this is the money that is coming into the business that is sources of funds.
Yeah.
Now, what do you do of these sources of funds?
You invest in the business.
That means you're going to use it for the business.
Yes.
You're going to apply this money.
Yeah.
And when you're going to apply this money, it is called what?
Application of funds.
When you're going to apply this money, it is called what?
Application.
It is called application of funds. So where can you use the money? Where can you apply the money?
Paying your liabilities.
No. So you take money and you pay the money.
No, buying assets
Okay.
and paying expenses.
So is there any difference between assets and expenses?
Um, yes.
What?
Asset is like something that you own, and expenses are something that you have to like pay.
Can you give me one example of asset
Machinery.
and expenses?
Wages.
Okay. Is there any difference between assets and goods?
Mm, yeah.
What?
Assets are like things to like use for like production, and goods are like source of production.
Assets are something that you buy to use in the business,
Yeah.
and goods are something that you buy to sell.
Yeah.
So if you're buying something to sell, that would be goods.
Yeah.
If you're buying something to use, that would be what? Assets.
Assets.
So in the business, money is coming from somewhere, that is the sources of funds. And the
Yeah.
same money that is coming into the business, you're going to start applying it. It will be what?
Application of funds.
The same money that coming in the business, you're starting to apply it. It will be application of funds. And I am giving you another rule. Application of funds, they always have which balance?
Um,
They
debit.
always have a debit balance. So application of funds, they always have which balance?
Debit balance.
Capital is what? Sources of fund or application of funds?
Sources of funds.
So it will have which balance?
Credit balance.
And assets will have?
Debit balance.
Sources of funds have which balance?
Sources of funds have credit balance.
Application of funds have which balance?
Debit balance.
So this is the reason that your sources of funds is always equal to your application of funds.
Yeah.
So I would say your credit is always equal to your debit.
Yes.
Sources of funds is always equal to your application of funds.
Yeah.
So I would say your credit is always equal to your debit.
Yes.
That is why in accounting, every transaction always has two effects.
Yeah.
Which two effects?
Debit and credit.
This is because of this principle that we have the principle of duality, or I would say the double entry system of bookkeeping, which tells us that the sources of funds is always equal to your
Source.
application of
Source
funds.
of
The credit is always equal to your,
debit.
it is because of which balance?
Credit balance.
It is because of the principle of duality, that your
Okay.
credit is always equal to the
Debit.
sources of funds is always equal to the
Debit. No.
sources of funds
Application
is
of funds.
always equal to the
Application of funds.
sources of funds have which balance?
Credit balance.
Application of funds has which balance?
Debit balance.
So sources of funds will always be equal to,
Application of funds.
credit will always be equal to.
Debit.
This is which principle?
Duality.
Principle of duality. So what does the principle of duality tell you?
There is always one credit and one debit transaction.
Every transaction has two effects, one debit,
Yeah.
one credit. What does the principle of duality tell you?
Every transaction has two effects: one debit, one credit.
Okay. And this makes your accounting equation, which tells you sources of funds is equal to application of funds. So it is capital plus liabilities. These are sources of funds, right?
Yeah.
This is always going to be equal to assets. And this makes your accounting equation.
Okay.
Okay. So I'm giving you time to write this. Tell me. Application of funds refers to? Answer? Application of funds refer to?
Option B, where the money is used in the business.
Buying machinery is an example of?
Um, Option C, assets.
Salaries paid to employees is classified as?
Uh, Option B, expenses.
Okay, fine. Let's go ahead. True or false? Assets are resources purchased or acquired by the business.
True.
Okay, they're going to buy the assets to use in business. Always remember this, okay?
Yes.
Okay, expenses are costs incurred to run operations.
Mhm. True.
Sources of funds must be greater than application of funds.
False.
Why? It can be equal or it can be more.
More. Okay.
They are equal as per which principle?
Duality.
Principle of duality. This
No,
is the
fundamental.
basic principle of accounting. Okay, match the
Okay.
following. Match the following.
Match the following. Assets, option B, things owned by the business.
Expenses.
Expenses, cost incurred in the business operation.
Application of money shows where the money
Um, Goes in the business.
is used in the business,
Yeah.
is applied in the business.
Yes.
Okay, next one. Dash or
Uh,
resources purchased or required.
Assets are resources purchased or acquired.
Dash are amounts spent on day-to-day operations.
Expenses are amounts spent on day-to-day operations.
Lovely. Fine. Identify if it's an asset or an expense.
Mm. Purchases
Identify.
of computer.
Hmm.
Expense.
Why expense?
Electricity bill. Because it's like a expense.
Who
Money
told
going out
you
the
is buying
business.
the computer to sell? Isn't a
Uh,
computer an asset?
Yes, miss.
Unless you are a computer retailer. Okay. So this is an
Yeah.
asset. Electricity bill.
Okay.
Expense.
Expense.
That. Expense.
Because you like pay the bill.
Inventory. Yeah.
Yeah.
Buying
Buying
inventory.
inventory is assets.
What is inventory?
Like goods available for like resale.
Stock. Resell. So
Stock.
you buy to sell. It's not an asset.
Yeah.
What is it?
It's
Goods.
an expense.
So this is a
Expense.
day expense. And the name of
Okay.
this expense would be what? Purchases.
Purchases.
Okay. Advertising cost.
It's expense.
Okay, fine. Let's go ahead.
Yes.
So can you summarize this for me?
Sources of funds represent credit balance, and application of funds represent debit balance.
They
The
are
accounting
always
equal
according to the principle of
duality.
we have two sources of funds.
Capital and no own funds and loan funds.
We have one application of funds.
Liabilities.
Okay. Liability,
Yes.
application of funds.
Application of funds where the money is being used in the business.
Okay. Can you give me accounting equation?
Assets no capital plus liabilities equal assets.
Okay. Principle of duality.
Uh, every transaction has two effects: one debit, one credit.
Okay, fine. Match the column. I'm waiting for you. Okay. So those who are watching the video will first pause the video, try to do it yourself, and then come back. Sources of funds.
Sources of funds is they have a credit balance,
Okay. Application of funds.
debit balance,
Capital plus liabilities.
equal assets.
Principle of duality.
Two effects in every transactions.
Double entry system.
Basics or double entry bookkeeping.
Lovely. So you are very through with your basics now.
Yeah.
So sources of funds is the places from where the money is brought into the business.
Yes.
Two sources of funds, own funds, borrowed funds.
Yes.
Funds is also called capital or owner's equity. It is the money introduced by the owner.
Yeah.
Borrowed funds is loans or liabilities. Liabilities is something that you're obliged to pay or you're liable to pay.
Okay.
Later on, after the recording is done, you will sit and make your notes and send me a copy of it. Okay.
Yes.
Sources of funds have what balance?
They have a credit balance.
Okay. What increases the owner's equity?
Money in no capital.
What increases owner's equity?
More income.
Profit increases owner's equity.
Yes.
What decreases the owner's equity?
Loans and liabilities.
What decreases the owner's equity? Profits increases the capital. What will decrease the capital?
Drawings.
Drawings or losses.
Losses.
Losses would decrease the owner's equity. Can you give
Okay.
me explanation of sources of funds?
Sources of funds is like money being bought in the business.
Capital.
Capital is like owner's funds.
What are the types of funds? Sources of funds?
Own funds and loan funds.
Own funds is?
Capital,
Loan funds is?
loans or borrowing.
Liabilities.
Yeah.
So you know about this. Application of funds, what is the meaning of it?
Places like where the owner, no, where the business spends its money.
Will use the money. There are two
Yes.
application of funds, assets and expenses. Assets are resources that are purchased for the business for use in the business. Okay.
Yeah.
What is expenses?
Expenses, cost incurred for running operations.
Or application of funds always have what balance?
Debit balance.
Okay, fine. So you know all of this. So assets is equal to owner's equity plus liability. What is this?
Accounting equation.
It is the accounting equation. It is because of which principle? Principle of?
Duality.
Okay. Can you give me another name for owner's equity plus liabilities?
Owners, own funds
No, this is only for this. I said owner's equity plus liabilities.
plus liabilities.
Sources of funds?
Sources of funds.
This would be application of funds.
Yeah.
Sources of funds have what balance?
Credit balance.
Application of funds have what balance?
Debit balance.
Debit balance. Okay. So you know the accounting equation also.
Yes, miss.
What comes in assets?
Buildings, motor vehicles, office equipments, fixtures, stock, closing stock, cash in hand, and cash in bank.
Can you give me the NCA in this non-current assets?
Non-current assets are
First four.
fixture. Yeah.
Last three are current assets.
Yes.
Can you give me difference between non-current assets and current assets?
Non-current assets are like assets that you don't keep, like you keep for like over 12 years,
Over 1 year.
over 1 year. Yeah.
And current assets?
Current assets are assets that you don't keep over 1 year.
Okay. Five current assets.
Five current assets: closing inventory, trade receivables, no trade payables,
Trade
other payables,
receivables.
trade receivables, other receivables, cash in hand, cash in bank.
Okay, fine. I'm giving you time to match the following. No, these are
Okay.
some terms. I wanted to go through this. I'll pause the video. If you don't understand anything, let me know.
Loan is credit.
Debit balance.
No, Mrs.
Okay. It's an asset.
Bank loan credit. Because it's the uh, 14 commission received. I think credit. Debit.
Hmm.
Debit. So it's yeah.
So it would be
Yeah.